That's what I like about how you give your scenarios to all the clients, is you give them not just one, not just two, not just three. You give them like 4 scenarios, right? With different down payment options, with different interest rates, with different programs, whether it's down payment assistance, FHA, or conventional. And from there, they know everything. Because it's not that they're just choosing a pre-approval amount or a down payment amount. They know what the itemized fees are gonna be a rough estimate of. It lets them know, oh my god, I didn't know I had to pay for transfer taxes. I didn't know I had to pay for escrow fees. I didn't know that I had to pay for NHDs, home inspections, credit reports, all of that.
Right.
Yeah, you don't
Absolutely.
pay for that when you're doing the qualification, but you do pay for it when it closes, right? And a lot of first-time home buyers do not see that at all. And when they do, they're like, holy crap, how come you didn't tell me about all these fees? And that's what I like about your estimate sheets.
And when I send those charts to them, I just don't send it to them, read it on your own. And
Yeah,
tell
you
me
talk,
later.
yeah.
No, I create that consultation for them. Hey, I created this for you. Let me know what time you're available. Let me go over each and every single option for you. And realistically, Chia, I don't know why other lenders don't do this, because it is a part of the Fair Lending Act. When you don't give your clients options, that's actually a violation. So, because it's considered steering, and that's the thing too. It's like there's certain options, even if the borrower didn't qualify for it, I'll tell them why, and that's the reason why the minimum that I'll ever give them is 3 options, and I'll tell them, okay, based on the debt to income ratio, this is the maximum that you would qualify for conventional with a 3%. Or this is the maximum that you would qualify for 5%, and this is what the maximum would be for FHA, right? Now, there's perks and there's pros and cons to each type of loan and whatnot, but depending on what their situation is, a lot of times people don't like to do FHA because FHA's mortgage insurance will stay on the life of the loan if you're putting 3.5% down, and you have to refinance to take that out, right? But the caveat is FHA interest rates typically are lower. This year is kind of different. It's not that much different than the conventional, whereas before it was much, much different, right? But either way, FHA gives you a much more higher purchasing power, which a lot of times outweighs, okay, from a conventional 3% down, where the maximum debt to income ratio is 45% versus FHA 57%. It's a huge difference. It's the difference between $250,000 house or a $450,000 house. That's $200,000 worth of difference in equity. And that's the thing. Sometimes when you don't understand what mortgage insurance is, or you don't understand what home insurance you should get and things like that, it may be very overwhelming. But at the end of the day, if your monthly payment is about the same as what you're paying in rent or less, or maybe a little bit higher, but it's your asset, you're building your own wealth. And even if you are paying the extra $200, the extra $200 is going back into your pocket eventually when you sell and when you hold on to it, right? And I always tell people that worst case scenario, would you be able to rent out one of the rooms and recoup that, right? Or worst case scenario, and you were just in a really, really bad pickle because one of you guys was laid off. It happens. Life happens. Then at least you know you can rent out your property.
Yeah.
And not have to eat a huge, huge loss every single month.
Yeah.
That's one of the biggest reasons why in 2008, all the investors were losing like 4, 5, 6, 7 homes. Because back then, you can get a 0% down, 520 credit score.
Yeah, that's crazy.
And there was no real true income verification. So gee, I wonder why that bubble popped, right?
Right, exactly.
I don't want anybody to shell out $1,000. And maybe that's not a lot of money to some people.
Right.
I'm sorry, but if my people are spending more than $1 that they don't need to, that's $1 too much. Maybe that's the Vietnamese in me. But
no, it's the Asian in you.
Right? I guess it is, because I was like, nope.
It's also because, you know, like we all have our own personal struggles that we went through, right, Lisa? And then we learn from that, we remember that, and then we don't ever wish that upon anybody.
Absolutely.
And so whenever we sense something like that within our clients, we kind of go, hey, no, don't do that, you know?
Yes, and that's because of our own personal experiences. Like, no, I made that mistake, so y'all don't have to make those mistakes again. I tell my people that all the time, and it's not about money spent. You can spend, you know, $500,000. That's fine. But I don't want you to waste money. I don't want you to waste even a buck on things that aren't truly prepared for you, right?
Yeah.
And that's the thing. Our people work very, very hard to get to where they want. okay,
Right.
and to get to their goal. I don't want anything to get out into the way
Some
of
of these
that.
clients are like from years of relationship building, of nurturing and
Right.
staying in touch and coaching, right?
Yeah.
Like, and so like we don't take this slightly, right? We're very serious about it, and I think sometimes, no matter how great you and I are, there's gonna be one of those clients that's not gonna wanna listen to what we have to coach them about, and it's okay. That's why I think it's so important that we recognize our clients, and that we truly like are transparent and make things simple for them to understand, and not try to confuse them with all these big words, right? All these vocabularies that only lenders and realtors understand.
Right.
So that's what I like about how you work with the clients too. You make it so simple.
Well, I try to. I really honestly try to. And that's the thing too, because a lot of times, especially during this time, we meet our clients only over the phone, right? So I have to really pay attention to see what their level of understanding is. And sometimes you've seen it happen with me several times where I don't notice when I speak fast, but when I get super excited and people are asking like all the right questions, I get super excited for them. I speak really fast. And sometimes I think that both lenders and realtors, it's not that we mean to talk about industry jargon, but we're inundated with it all day, every day, that sometimes we kind of forget too, you know? So it's really important to break that down to our clients and not quote unquote dumb it down, but to break it down so that it's consumer friendly, right? It's a consumer verbiage that we're using.